Hi, welcome back. Today we are talking about a spending trend of buy now, pay later. So to talk about this trend, breaking it all down, we have financial analyst Steve Budin joining us this morning. Good morning to you, Steve.
Good morning.
Okay, so what exactly is this spending trend of buy now and pay later?
Buy now, pay later is really gaining some traction and some popularity in the market. It's a little bit different than your normal credit card purchase. Basically, what it is, it's an arrangement that allows somebody to go in and buy an item, and you make a small down payment, and then you pay off the balance over time, hence buy now, pay later.
What are some things that those going that option should be looking out for?
Right. So this is not your traditional credit card arrangement. So let's just use a simple example. Let's say you buy an item for $1,000. You might put $100 down, and then you have a $900 balance that you might pay off over time. So it could be $100 a month for 9 months. It could be $150 for 6 months. So the number one thing when you get into one of these arrangements, and I should say, many of these arrangements are interest-free payments. So it can work to the advantage of the shopper. Just have to be careful. First and most important thing is understand the terms of the arrangement. How much do you have to pay and for how long? It's different than a credit card where you just make a minimum payment and pay interest on the balance. So there are more strict requirements for these types of deals.
And the idea is to be budget friendly, but what happens if we miss a payment or we're late on a payment?
Right. So the interest-free certainly benefits the shopper. And of course, the catch is if you miss a payment or are late, very often the late fees can be fairly substantial, and the interest rate you'd pay on a penalty could be real high as well. So that's really where the financial institutions make their money. They're betting on the fact you're going to miss a payment or be late. So just be very careful. Again, if you read the agreement, make sure you know what happens should you be late or miss a payment.
So you sign up for this agreement and you are committed to paying $100 every 7 months or for the next 7 months. What happens if you get that item, but you want to return it?
Yeah, and that's a great question because it can really be a fly in the ointment. So let's say you buy an item, a month goes by, you decide you want to return it. Very often, the financial institution will still require you to make payments until the seller can notify the bank that you returned it. So if you're on a tight budget, just be prepared. If you don't like an item, you may still have to pay for a couple of months. Now you'll get credited back on the end, but you still could be out of pocket some money until that arrangement gets approved. So my advice would be buy an item that you're sure you're going to keep, because the return policy can really be onerous.